Welcome to TQR. I am Sharad Vaze, practicing chartered accountant for more than 39 years. Now, we got two responses on our second TQR. One has raised the issue that the position of gift vis-a-vis the children, and number two, one has stated that he had done this about some 7-8 years back. He has gifted all his deposits, he has transferred all his deposits in the name of the spouse, but income tax department has accepted it. They have not raised the query, or they have not raised the issue of clubbing of income. Even after transfer of this property to my spouse, she is filing return of income on that interest income, and the question of clubbing does not arise in my case. Then how come? So these are two issues raised by two different persons. So let us see one by one. In the first case, one has asked the effect of gift in saving of taxes in case the gift is given to the children. Yes, very well, you can make a gift of any property, movable or immovable, to your son, daughter. However, if the property is transferred to your son or daughter and any income is earned out of that gifted property, then the interest income is to be included in the hands of the father or mother, as the case may be, having higher income, provided that your son or daughter is minor. So if the income is earned by your major son or major daughter, then it is separately taxable in their respective hands, and nothing is to be included in the hands of father or mother, as the case may be. In short, the inclusion is applicable so long as child is minor. Once a child becomes major, clubbing provisions or inclusion provisions are not applicable. However, there is an exception. However, if you transfer a property to a minor married daughter, in that case, the law provides that it will be her income, and such income will not be included in the hands of father or mother, even though your daughter is minor, but she must be married. So unmarried minor daughter and minor son, the income will always be included in the hands of father or mother having higher income. Of course, it is up to you how much property to transfer in the name of your children when you and your spouse is alive. This is your personal question, but normally we do not advise to part with major property or majority of the value or investment to the children when you and your spouse are living. Of course, this is your personal question and nothing to do with taxation. The second question that has been raised is, one person has done the form of gift to his spouse. In the previous example, we have said about 40 lakh rupees, and on that 2.5 lakh rupees interest is earned. In the TQR2, I have explained that this 2.5 lakh rupees includable in the hands of a person who has transferred the property. This is the provision of law. Whereas one has said he had done it about 6-7 years back and he is filing the return excluding interest, and his spouse is filing the return only for interest, and the department has not raised the query or department has not accepted it. Now I can only add this. Now in this TQR forum, what we are going to explain, or what we are going to give the answers to the questions only within the four corners of law, because it might be different in practice. But I can give an example. In a sense, if you are going through a one way, for 100 times you had gone through it and no one has objected to it, and at the 101st time if you had crossed the road through one way which is prohibited and the police catches you up and normally the police waits at the other end, you cannot raise the issue that I had traveled through this one way 100 times and no one had caught me, therefore you have no right to catch me at 101st time. The law is like that. So if you have not been caught, probably because your return has not been scrutinized or your return has not been assessed either under section 143.3 or any other applicable provisions, and that's why probably it might have gone just like that. So it does not mean that whatever your contention is accepted by the tax authorities. Once they realize it, they can do the assessment, whatever income is included, whatever income is taxed in the hands of your spouse will be includable in your hands and you will be reassessed. And if the law permits, even for earlier 3 years, the cases can be reopened and accordingly you will be liable to tax. So what here we are prescribing is the legal provision. So it has been accepted by department by filing return does not mean it becomes a law. Probably it must have been passed through without any scrutiny. So again, friends, if you have got any queries, do ask your questions, do offer your comments. We'll be happy to reply back. But before taking any decision, before taking any coming to any conclusion, it is advisable that you have your consultation with your tax professional, because many times all the facts may not be given or there might be change in law between our answer, between our solution and its actual application after say 1 or 2 years or even down the line after 6 months. The law might get changed or the court decision might become available in the meanwhile. So please consult your tax professionals. Now we are giving this, our USP is we are giving replies in various languages. So far we have covered 8 languages. We'll try to add many more languages so that it will be useful to the general public. Thank you very much.